GM Cito, the time has finally come to share with you the ultimate STRD protocol tokenomics guide. I've been working on this guide for the last few weeks, and now it's finally ready to be shared with you. So first off, what is STRD? As we all know, STRD was the first and is now the largest liquid staking provider in Cosmos. It has a TVL of 34 million and is offering liquid stake tokens such as STAtom, STTIA, STOSMO, STDYX, and many more. And the second major product feature that STRD is about to launch is the STRD DEX, which will be the first IBC Eureka enabled DEX built on top of the Cosmos Hub. So here a brief history about STRD. The protocol launched, or STRD protocol was founded in June 2022 by its three co-founders, Wish, Aidan, and Riley. And just a few months later, in August 2022, they raised their seed round with 6.7 million. And just 1 month later, they went live on mainnet with their first product, which was STAtom. And like February 2024, they launched STTIA, so on and so forth. And lately in April 2025, they announced an investment to build STRD Swap on the Cosmos Hub, which was solely done by the ICF Interchain Foundation. All right, let's have a look at their token, the STRD token. So they have a max supply of 100 million, which is a little different than the usual Cosmos coins or most coins these days, which have a supply of 1 billion. The circulating supply is already 92 million, and they have a market cap of 33 million and an FTV of 37 million at the moment of recording. And the token is just down badly from its all-time highs at $7, and it's currently ranked at position 888 on CoinMarketCap. So when it comes to the token distribution, here we have the usual pie diagram. So 31% of the entire token supply went to community incentives, which were given out throughout the lifetime of the STRD protocol. For those of you that were around in the very beginnings, you might remember that there were massive incentives on liquidity pools on osmosis for pairs like Atom, STAtom, and later on for Osmo, STOSMO, but also for Juno, STJuno. And more recently, they launched some incentives for STDYDX and other tokens like STBera, I guess. Core contributors received 24%, and 16.7% went out to initial investors during their seed sale. Around 11% went to a strategic reserve, which is managed by the STRD Foundation, and 6.3% were given out via an initial airdrop to, I guess, mostly Atom stakers, and then some minor allocations for staking rewards, community growth, and initial security. So now let's jump into the token vesting schedule, where it really becomes interesting, since 92% of the entire STRD supply is fully unlocked. We all know that most tokens these days have a high FTV but a low float, but this is the total opposite for STRD. They have a low FTV and a high float, and by October 1st, 2025, so just in a few months, as we can see here in the unlock schedule, 100% of the circulating supply will be unlocked. So this allocation here is for the core team members, and those are for the partners/VCs. So in just a few months, 100% of their tokens will be unlocked and circulating. There are some minor exceptions, but more on that in a second. And here there's another chart directly from the blockchain, and here you see the STRD vesting pool. And most of these tokens have been unlocked, and there are just 9 million tokens left to vest. And as you see here, in a few months, around October, everything will be fully vested and unlocked. So next up, investors and funding. There have been 4 funding rounds in the history of STRD protocol. So the first one was the seed sale, as we briefly mentioned at the start, where they raised 6.7 million and sold 16.7 million tokens at a price of 0.4 STRD. That's not officially confirmed, but this is just based on the math that I did. As you see here, I just suppose that they sold this entire bucket. So if we divide these tokens by the amount raised, then it should give us a price of $0.4 per STRD token. And that dates back to May 2022. Then about 1 year later, they did an incentive diversification sale where they sold some tokens, I guess from the incentive pool, where is it? From the community incentive pool to Multicoin Capital and North Island VCs or venture. After like these VCs basically asked them if we can join the round at a later stage, and there they sold 3 million tokens for a price of $0.5 per stride and totally raised 1.5 million. Then again, a third funding round in January 2024, just 1 or 2 weeks after Celestia went live. They had another strategic Celestia fundraiser where they raised 4 million and sold 4 million tokens at a price of $1 per stride. And as you might have noticed, Stride is currently trading below all of these rounds, definitely below $1, below the 50 cents and below 40 cents, currently around 37 cents at the time of this recording. And then just 2 months ago, they had an Interchain Foundation fundraiser where they sold some equity token mix to the Interchain Foundation to build out Stride DEX on top of the hub. And the amount raised and the tokens sold, as well as the price, are undisclosed. So we don't know exactly how much they raised there, but what we know that they raised a total of 12.2 million plus ICF funds and sold 23.7 million Stride tokens, plus some tokens that might have gone to the ICF. But it's around like 1/4 of the entire supply, which has been sold throughout 3 or 4 races. And like here you get a breakdown of who invested in which round. And the Stride team mentioned it several times that they have enough runway, so they don't need the protocol revenue to go back to the team in order to keep the lights on, which is very positive to hear. And here's another chart that I prepared, which now includes the vesting of like the second and the third fundraising round. Here in red you see the seed round, which is fully unlocked by October. And since the incentive diversification sale was held 1 year later, these tokens will lock a little longer. As you can see here, it was held on March 2023 and they have a 1-year lock and a 2-year vest. So these tokens that you can see over here, they will vest until March 2026, but those are only 3 million STRD. And then the strategic Celestia sale, same here. They have investors, you have a 1-year lock with a 1-year vest, and these tokens will be fully unlocked by January 2026, that you can see here in the yellow zone. So keep like 2 important dates to keep in mind. October 2025, that's where the majority of the tokens will be unlocked. And then just like about 6 months later, everything will be unlocked. But I don't think that like these numbers make a major difference anymore since they're linearly vested. So at this point, I think 97% should be fully unlocked. All right, let's move on to Stride inflation. So another unique selling point is the very low inflation rate, which is currently at 2.2%, and the staking APR of 1.52%. And bonded tokens are pretty low. Only 21% of the entire Stride supply is locked, and the unstaking period is 2 weeks. But there is a reason that only 22.1 tokens are staked, since Stride adopted interchain security. So this means that Stride no longer has to inflate their tokens to pay for security, since the validators on the Cosmos Hub are securing the Stride chain, which allows them to have a low inflation. And initially 5.2% of the entire supply was earmarked for staking rewards. So STRD has a fixed supply of 100 million and is not like inflating forever. This is like a hard cap. And they also have a 1-year halvening where Stride commissions get cut in half every single year. So the inflation next year will be 1.1%. And another very handy feature is that vesting tokens can be staked by VCs and team members, but are not eligible for staking rewards, which is pretty cool. And here you see the reason why the staking APR is lower than the inflation, which is a bit odd. Usually it's always the other way around. But the inflation is distributed to 4 buckets. So 16% goes to stakers, 21.5% goes to the community pool for growth, funding hackathons, grants, marketing. 13% goes to security, like audits, insurance, so on. And like the bulk, around 50%, goes to a strategic reserve. And this strategic reserve will become more important as Stride Swap goes live in the coming weeks and months, because now they can pay like market makers or use these STRD tokens to bootstrap liquidity on the Stride DEX. Another cool feature is the Stride burn. the governance proposal 252 redirected all protocol fees to a buyback and burn mechanism. And the first burn was conducted in March 2025, burning around 300k of the entire supply. And by now, over 400k of STRD have been burned and removed from the supply forever. And yeah, if this burn rate continues, that would equate to 1.5 million STRD burned yearly, which is 1.5% of the entire supply. And this is solely based on the current revenue coming from liquid staking, and it does not include additional revenue that might come from the STRD DEX as it goes live in a few weeks. And yeah, you can follow the STRD burn on Twitter. There's the STRD burn tracker, and like every single day you get updated how many STRDs are being burned daily, the total amount of STRD, and yeah, what that would imply for a yearly burn rate. All right, let's move on to STRD token utility. So the number one utility is governance. Of course, as with many app chain tokens, token holders can participate in on-chain governance. And number two, it's protocol fees. So STRD token holders benefit from fees generated by the protocol, as 80% of all the fees that STRD generates are used to buy back and burn STRD. And the remaining 20%, I guess right now it's still only 15%, but as soon as the STRD swap launches, it will be increased to 20% via a governance proposal. Yeah, these like 20% of the fees go back to Atom in exchange for the Cosmos Hub providing security for the STRD chain. And of course, these numbers can always be tweaked or amended by STRD governance. So now, very important, how does STRD accrue value? I already hinted at it. But yeah, so STRD has basically two revenue sources. Number one, LST fees. So for now they have a total value locked. For now they have a TVL of 43 million, and STRD takes a 10% fee on all staking rewards accumulated by their LSTs. So if you hold ST Atom, ST TIA, STRD charges or takes 10% of your staking rewards as a service fee, because you can lean back, you don't have to like log in, manually claim your staking rewards. Your staked Atom, TIA, whatever is liquid, so that's why they take a 10% fee. And soon in the future, as STRD swap goes live, there will be a second value accrual mechanism for the STRD token, as they are most likely gonna charge a 0.1 taker fee on all swaps that are routed or are facilitated by the STRD DEX. The 0.1 taker fee is just the default. Osmosis, Uniswap, all these folks charge that fee more or less. And yeah, here once again a graphic how the revenue is shared between STRD and the Cosmos Hub. 80% goes to STRD, 20% goes to the Cosmos Hub. And like it might also be a little bit more fluid, so that parts of this revenue over here might also be used to like provide liquidity for Atom and STRD in the future, like twisting this ratio a little bit more towards Atom, but still it's up to governance, and this is the rough breakdown of how STRD revenue is distributed. All right, here just some fast numbers about protocol revenue. So their LSTs, they make like weekly fees around 70 to 150k, of course, depending on the market price of the underlying assets, which accrue, and like given the 10% fee that STRD takes, that is a weekly revenue of 7 to 15k that accrues to the token, which will be used to buy back STRD and burn it. And then soon, as the STRD swap DEX goes live, here I highlighted it, not live yet, there will be a second revenue stream, and here I just did some quick napkin math. Oh, I hope you can see it, but yeah, let's just, like here I took the numbers of weekly volume on Osmosis, like a low week, an average week, and a high week, and we apply the taker rate, and now I suppose that STRD will do 50% of the volume that Osmosis does. It does the same amount of volume, or it does twice the amount of volume, and of course you can play around with these numbers for yourself. But let's suppose initially STRD will do 50% of the volume of Osmosis, so that would, in the low case scenario, it would add another 40k of weekly revenue on top of the current revenue, which could again be used to buy back and burn STRD. And for now they're using about 10k to do the buyback and burn. With additional 40k, which is like my low case, the burn would increase by 4x, which is like wild. Let's see how this plays out. But of course, they still have to launch the DEX, it has to get traction, and so on and so forth. And here, another cool calculation I did is like unrealized profits to market cap. And currently, VCs sit on negative unrealized profits since the current market price of STRD is smaller than the investment price they paid back in the days. Like they invested for 40 cents, 50 cents, $1, and currently Stride is trading at 37 cents. Therefore, the unrealized profits to market cap ratio is negative, and this results that there should be no low to no sell pressure coming from VCs since they sit on zero gains. I mean, you could make the case that they no longer believe in Stride and they sell their positions at a loss, which might be the case. But yeah, generally that's very healthy to see since there are other coins out there that have a unrealized profits to market cap ratio which is higher than 100%. So that means that there are locked tokens out there that can be sold on the open market that are worth more than the current market cap. And if you do some basic math, if there are more tokens to be sold than the current market cap, these tokens will have a very bad future performance most likely, and it's entirely the opposite for Stride. All right, let's move on. Sex's DEX listings. So a negative point for Stride, they're only listed on Kraken and on MaxC. So, and also there's very low liquidity, but they're listed on several DEXs like Osmosis, Osterport, Shade, Kujira, Helix, and so on. Here the future roadmap, as I mentioned, this summer they're planning to launch the DEX, and throughout the year they will add on top and introduce some new features like DCA, limit orders, hooks. They will integrate their liquid staking tokens into the DEX itself and also enable lending. And in Q4 they plan to support other networks beyond Cosmos like Solana so that you can trade SOL or SPL tokens there as well. And 2026 they want to integrate more tokens. And here to sum it up, the good is they have low inflation. Tokens are almost fully unlocked with 91% circulating. They have a nice buyback and burn mechanism, real protocol revenue, which could further increase with Stride DEX going live. The team has a big the team is experienced, they are Cosmos OGs builders and they have good runway. The current token price is below all previous funding rounds, and a major catalyst is just on the horizon with the launch of Stride Swap. And of course there are also risks, like one major risk is the low token liquidity, and it's only listed on one major SEX like Binance. As you see here, the deepest liquidity for the token is on Osmosis, and here this pool is 120k deep. There are some other tokens, but if you do a 10k swap, you face massive slippage. It's like 6.2%. And if we briefly look it up here on CoinGecko, you see that Osmosis is the biggest venue, and on Kraken and DEX MaxC, the volume is fairly low, to be honest. So whales buying in and out can massively move the price. Then of course there is rising competition in the LSD market with Drift, Milky Way all trying to take some market share away from Stride. And just generally LSD are no longer the hot and shining object that they were a few months ago. And then there is execution risk with launching the DEX. It's not live yet. There is a lot of uncertainty about IBC Eureka and whether they will find product market fit and adoption. That's still a big question to be answered. And probably not the most concerning, but another pain point is that Stride DEX, the launch, depends on the EVM being ready and going live on the Cosmos Hub, because without the EVM, the permissionless Ethereum virtual machine, Stride cannot deploy, and that might just push back the launch for several months. And just in conclusion, the Stride is in a uniquely strong position as they have a very good relationship with the Cosmos Hub and the upcoming Stride Swap launch. And at the same time, the introduction or the go-to-market of IBC Eureka might benefit them massively and increase their revenue by 4 or 5x as we outlined above. And so if everything is executed well, this is a significant moment in time to invest into the Stride protocol, since it doesn't happen that often that in liquid markets you can pick up tokens that are almost fully vested, that have no more unlocks, and you can get in at a lower price than all the VCs that bought the token before you for a cheaper price than they did. And I mean, there is no more risk, or the risk for you is lower since the team has been around, they are experienced, and you can buy the token without any unlocks. You can just hold it and dump it whenever you want, and these VCs usually get in at a premium, but this time it was the other way around. Now you can get in at a premium for much better condition than those folks that had to lock up their tokens for years and they didn't receive staking rewards. And yeah, the risks are just the same that I outlined above. If Stride Swap fails to gain traction, IBC Eureka never finds product market fit, or the EVM launch on the Cosmos Hub just gets pushed back. And yeah, I hope that I gave you a good overview of the Stride token. I started accumulating a few weeks ago, and I will continue accumulating until we get closer to the Stride Swap launch, and then we will see if it paid off or not. And yeah, of course, I'm a BetKit Maxi or a big BetKit supporter, and Stride team as well. They are big BetKits lovers. I mean, all of their team members, they rock BetKits as their profile picture, and they were the first community pool or the first community treasure that bought 35 BetKits back in 2023. All right, that's everything for today. If you have any questions, please let me know in the Cito Plus Discord. I'm there to answer your burning questions. And yeah, see you around. Sepmos out.